in 2007, in the middle of 2007, we were in a convention in Las Vegas, and Faith Schwartz, the head of the Hope Foundation, spoke to a big round table of many of the largest lenders, CEOs, or certainly loan servicing managers, people in a position to know and a position to do something, were at that meeting. And she and others at that meeting were letting people know that the key to handling this and the key to getting through these serious situations was, and what they were dealing with was the Detroit automobile, crisis, even preceding the mortgage crisis that we had. And they were getting remarkable success at going very, very quickly, not letting these things go on forever before making a determination. And that was her advice. But most of these lenders, certainly all of the major lenders, were sitting right there in the room. A lot of them agreed, a lot of them concurred, a lot of these guys were VPs, etc. But for whatever reason, this message never got passed down the line. It didn't really go through. Let's get these people assistance now. Let's do something with this loan, rather than getting this into such trouble that we've got a homeowner that now has to go into foreclosure, and we're dumping all of these loans onto the market. So, I mean, this was all known before this crisis even really seriously began. So the reason why I'm going into these details is because I think all of us, all the way up to the head of FHFA, all the way up to the President of the United States, all the way up the line to the head of HUD and the head of the Treasury, all right, FHA, all of these guys, the feds, you know who you are. And everybody that was on this really has to take that shoulder, put their shoulders higher, take more of the responsibility, and realize that there is something that you can actively do that makes a lot more sense than what has been done so far. So one of the things is be alert to solve these situations as they come on your plate. Don't just pass the buck. I think what happens is lenders that want to continue the facade, that they're completely impenetrable by public opinion, and they can't have these, their controls be lost, and anyone, anywhere on the planet telling them that they have to reduce the principal. And so to prove the fact that they don't have to listen to this, they're absolutely not listening to it. And they're refusing to comply with it, despite the fact that most often those workouts, of course now, with a person who is qualified, who truly is needy, modify the loan, and if it's necessary, modify it by reducing the principal ultimately, if they end up having to do that. But unfortunately, they don't want to set the precedent. A lot of times, B of A, they don't want to set the precedent of this, and so they don't want to have any future instance of borrowers being in trouble on their home loan to look back and say, oh, this is how you have to do it, because what ends up happening then is these lenders, like B of A, let's just take for instance, and they're really one of the biggest, if not the largest lender out there, biggest market share, but really, are they using their own money? For most of the loans that they give, no. The answer is no. They are not using their own money. They're using other people's money. They're using investors' money. And most of these lenders really don't want to see the investors' money drying up. And if you guys were an investor, let's just say you, Joe, out there, were an investor, and you had your money in the game, would you want somebody telling you with a gun to your head that you had to reduce principal? So But again, you do need we need to have more pressure on the lines to get a more sane solution put on the line. When you flood the market with more properties than people want, you're going to have prices go down. When you continue to have these lower prices on the market, people are going to let those higher priced homes sit there for a year and a half. And meanwhile, they're going to go for the lower priced homes. And that's just the way it is. So now, we have people that have been on, and I talk to people every day. They were on a loan modification process with a lender for over a year now. And the lender still hasn't gotten back with them with a workout. And the only reason they're not in foreclosure at this moment in time is because they haven't given them the workout, and the civil codes in that particular state require that the lender at least have somebody who's in a position to know, like in California, has to call and tell them what workouts that could possibly work for them. And this person, absolutely, I looked through this, and this workout could work, and that workout, and this kind of workout could work. So many workouts that are so far better than foreclosure could work for this guy. And yet, he's being offered nothing for over a year. And, these guys were given things like a 2-year low interest, 2% or interest only, and 28-year at the 4 points above LIBOR, right? So, you have a scenario like that where basically a fellow's totally maxed out before the recession ever started. And now his wife is taking 10 or 20% off of her labor hours because she's a teacher, and and he's losing income from his business as an auto mechanic or whatever, and so there you have it. It's just it's amazing the scenarios that these people are plowing through, and yet they want their home, and they would keep it if they could just pay what they could afford. And these, unfortunately, some of them just go on forever and ever. And most of those ones that are going on truly are because the underlying investor on them is some securitized loan pool or something like that, and the trustee of the loan or the bank that's servicing that loan or the bank that has the power of attorney or whatever to sign for the people in that pool, for the people that the trustee of the pool of loans that's backing up the securities, etc., is somebody from Germany or China or whatever. And so these guys are they're just not in tune at all with all of the things that people have had to go through. Not only not in tune, but they just simply don't care. Do they care about the United States Constitution? Probably not. So that's just, basically when you have these kind of negative amortization mortgages and things still in play, you still have interest-only loans in play, right? You still have people with 5-year loans that are about ready to reset. That kind of thing still in play. Let's get some workouts done. You're basically forcing these people to take another alternative, such as a short sale. And frankly, I've heard a lot of lenders, again, not the Fannie Mae Freddie Mac ones, but where the investors are non-Fannie Freddie, non-government loans, where the lender, the only thing they want to hear is do a short sale. I'll take the money on the back end. And usually those lenders won't forgive a dime of deficiency unless they, somehow or another are really enticed with an extremely good offering at the short sale over what they could get if they foreclosed. So, basically, take a look at the upcoming videos that are coming up, and in order to get some of my ideas and hopefully get some more of your own ideas on solutions to this and all of the other problems that are attendant in the mortgage crisis. And thank you very much. My website is www.foreclosurefreedomnetwork.com. I'm Connie Saunders, and the toll-free number where you can reach us is 877-333-4506. Thank you and have a great day.